Good evening. It's been a long day for me today, and today is Monday, the 9th of November, 2020. The time, 7 p.m. Central Time. You know, this morning I was putting out my morning future subscriber video. I was recording at about 5:45 in the morning and going through it. I'm doing the charts and I'm looking, all of a sudden the markets are taking off in the stock indices, and I'm going, what the heck's going on? Of course, logic had me think, well, President Trump, it's early in the morning, probably did a tweet where he's conceding the election and the market wouldn't like that. That's what I thought. I went on doing my recording. Little did I know that at about 10 minutes after I had begun, maybe even 5, the CEO of Pfizer appeared, and he was appearing, I think it was CNBC, and they had their breakthrough. 90% reliability in a test involving 44,000 people, all age groups, and a 2-shot vaccine. Whoa, that was a game changer. So the stock market takes off. The metals were up, and then all of a sudden they nosedove. Why? People had to start figuring out, what does this mean? Bonds and notes got smashed. Oh, that means higher interest rates. Well, does it? You're still fighting the Fed. That's not what the Fed wants. And just because you have this vaccine, how long does it take to roll it out? Blah, blah. AMC stock goes up 50% in price. The cruise ship liners, everything moving. And of course, commodities all over the board. Cattle market goes roaring. Couldn't begin to tell you why, but that's what it did. Maybe it's demand for the beef in restaurants that eventually will be able to fill their lockers again. I don't know. Here's what I do know. When you hit a Bollinger Band, forget why the reason. The first time you hit it without an embedded reading is often an area where the pros, be it algorithms, guys with experience, things I've learned over the years, the pros, I am a pro, say, you only stay over that number 5% of the time. If you play for vertical price moves, they will happen 1 out of 10 times, which means you're going to lose on that theory 9 out of 10. That's my guess. Do I have the actual math? I don't. That's my guess. But I look at the markets like nobody all day long. So I think my guesses are good. When we take a look at what happened here, you have a market that, let's get rid of, this was last week, the 6th. This is today added to it. And we know that what that is, the week's not over. You just see that you're continuing to the upside. We've had a successful test of the 18-week moving average of closes. We came in with action, and let's take away this. Let's just stay with that. That's Friday. We come in, and today the market goes absolutely crazy. Explodes to the upside. It opened near the lows of the day, friends. Then it rallied, and it gave almost everything up going into the close, and it's about unchanged in early evening trade. When I look at the swing line, let's get rid of today. This is how the market looked. I had a lower low and actually a higher high, not a trend. In order to create a trend, you have to take out this high, but the risk would be buying the market over 35.22.5 and putting a stop at 34.56. I mean, that's a $3,000 risk for a full-size contract. That's a heck of a lot of risk. Yet the market soared on the news and gave up a lot. Let's keep a look at the moving averages. You had come in over the 18-day average. You've been over the 100 and the 200. What's the resistance if it's not a moving average above the market? Well, it's likely the Bollinger top, and it's right here. So coming in, this is how you looked. One of the things I teach in my charting course, you can get the course by going to our website, www.iraepstein.com, under the word education. Explains how it all is. 6 hours of videos with the charting software and everything. And my research is included for 30 days in it with all the bells and whistles. This charting software, I think you'll love it. Not expensive, by the way. That would be my resistance point. And if you were sitting at my shoulder, that's the number I'd say you've got to take some money off the table. Well, the market soars through it and then pulls back. What about overbought, oversold? You have an overbought market. So as much as you're going to tell me, and I know people are telling me all over, oh, this is the big change and it's just up and away. No, it isn't. At least not on this chart if you're a chartist. That does not mean the market can't back and fill. That's what I'm expecting. Time will take its toll. In the NASDAQ, the market, this is how we looked on Friday. It's the same pattern. A lower low, higher high. Not in a trend. If you cross this high of Thursday, then you're in an uptrend. The resistance, the upper Bollinger Band. You went to it, you pulled down, you closed sharply lower on the day. What did the pros do? Pros take advantage of the odds. And the odds are you're going to stay within the bands 95% of the time. That's where I think the pros are going to stay. What'd you do when you hit the Dow? This is how you looked coming in. Haven't hit the Dow in a long time. Not embedded. If you hit it, we were sitting together, I'd say that's where you got to take something off the table. That's what I teach. So am I making it up? No, it's in my course. So I'll stand by what my course says. The Russell. This is how you looked. You hadn't hit it since back at the beginning of October. If you hit the number, regardless, small cap, large cap, whatever you think, and an uptrend, I still think that's it. And notice how the market's pulling back. Support's under the market. The market is now correcting an overbought condition. And by the way, this market, if we take a look, this is how we looked on Friday. We were already overbought. You went up today, stayed overbought, but because you came back and settled so much lower, you're already out of the overbought condition. That's unusual. This morning, I know what I was telling my subscribers. I said, boy, if you get down to the lower Bollinger Band, don't be surprised if you see the put writers come in looking to get back to 27.41. Again, didn't hit it, but that's what I thought. And wow, the market not too far away. So let's talk about the bonds now and what the market did. This is how you looked coming in today. This is Friday's action. I'm going to repeat what I said. Hit the Bollinger Bands. That's where I think the pros are going to take money off the table when you're not embedded, bullish or bearish. That's what you did today, and this is where you're at tonight. So I'm going to stick with what I said. So much went on that these markets need to restructure. Same thing in the 10-year note. I don't have to do each one for you. Dollar index. This is how you looked coming in from Friday. On Friday, the market had got down to the lower Bollinger Band. You hit 92.16.5. That number was 92.20. Today, you're back up. My point is this. That's all that my point is. If you play the percentages, you're in the driver's seat. You don't play the percentages, you're chasing your tail. Oh, I'm bearish. Why didn't I get out there? Oh, I'm bullish. Why didn't I get out there? You don't want to do that. You want to have a game plan. Whether you agree with me on my Bollinger Bands, that's not the point. The point is you have to have your game plan and you have to know how to initiate it. Having it and not initiating it, shame on you. Slap, slap, slap. If you were in my classroom, that's exactly what I would do. I wish we had the old days with the paddles. I was already beyond that age, by the way. Lower low, higher high. Just missed that number there. Pretty interesting. Japanese yen. Boy, did they pull the plug on this market. This is how we looked over the Bollinger Band. You'd hit it for 2 days in a row, maybe 3. The odds of staying over it, you know that I'm going to tell you, very small. You had 2 days in a row over it, 3% chance of staying over it for Monday. Why? I count each successive close over a Bollinger Band as taking away one of those 5% of the time points. And I know you're going to say to me, what happens on the 6th day? Just telling you the market's stronger. First off, you're not, if you understand the Bollinger Band theory, you're not trying to go short here. You're trying to use that as a resistance point and measure, is the resistance fading a little bit? Is the momentum fading? I teach that again in the charting course. And as you can see, the market slipped back. Now what do you have? You have nothing. You have a momentum market that's getting back to normal, higher high, lower low. Bitcoin, still an embedded reading. Get the red number to close under 80, and it's not there. It's at 82.19. Then I think the market's ready for more of a correction. It hasn't even flashed the beginning of it. I know you're going to tell me it's arcing down. I agree, but it hasn't gotten under 80. In the differential between Brent and WTI, we keep fighting a battle at this number. Now, one of the things I pointed out last week was for the first time on Friday, the market had had a close over these numbers in quite a while. You pulled back to them today, and now you're coming back to test it. We'll see how it acts in the morning. This could be where Brent starts pulling away from WTI crude. In the Brent, we're in an uptrend. You have higher lows, higher highs. I'd be looking for support 41.09. What number stymied the rally? The first challenge of the resistance point at the 100-day average of closes. When you're under it and you rally to it for the first times, and that's what you've been doing, you haven't been able to really get over it and stay over it, it's a resistance point. It's not a spot to go short. It's where I think the pros are taking money off the table. Not everything's about a Bollinger Band. You have to look and see what fits in where. Not everything's about trading one contract at a time either. If you have multiple contracts, how do you layer in, layer out? So that's what I'm looking for. And the number that would scare me is if you got under 39.33, that would break the uptrend. Is the market overbought? Yes. Do I think you're going to get big support at 41.09? No. I don't think the pros buy overbought conditions. I think they'll buy embedded readings, not that. I have the same dilemma in WTI. It got up again to that resistance point. Just look at the 100-day average in green. What's it been acting at? Support, most likely the 18-day average, but I don't think it gets a lot of support again because it's overbought. Heating oil went to the deadly combination of what? This is where you're at. I teach here that the first time you hit a Bollinger Band 100-day average, it's an awful lot of resistance. First time you hit that combination on the bottom, it's an awful lot of support. That's where I think the pros are going to do their thing. Did I know it was going to go there today? Absolutely not. In fact, coming in, I had a lower low, higher high pattern, not a trend. But you went up there, and that's basically where the market ran into its buzzsaw, and it's already 200 points away from that number. That's a lot of money. It's $800 on a futures contract. The nat gas, well, we know how warm it is. We're setting records day after day in Chicago. I think this is 8 days in a row, 75. Now, Wednesday, it all changes. We go back into the 40, 50 degree, and this is over. It's probably the last warm spell of the season, but it is a time frame where the amount of nat gas you need in a large swath of America is building, not being used because the weather is mild, and that's weighing on prices at this point in time. You know, I talk about this and an awful lot more in my morning subscriber video. For $7.95, you get our phone application. That's where I put out push notifications as soon as I publish anything, which you can view there. You can, of course, and we want you to view it on our website, but how do I get the notice to you? I send an email and so on. I cover 40 charts in the morning. I'm going to give you the daily fundamentals. That's how I'll start you off. Then I'm going to tell you what I'm seeing out of Asia, Europe, and America, what reports are coming out, and review with you the thoughts on the market. The videos will last about 20 minutes, so they're not a 2-minute video that you're doing this for. The videos have a scroll bar on the bottom. If you wanted to go to bonds, just scroll over it and it lights up. It says you're in bonds. You can watch it that way. 6 days a week I'm doing these. So Monday through Friday, the dailies. The weeklies, where it's for the longer term positions, that comes out on Saturdays when I record them. How do you get it? Try it for $7.95. What's a tick worth in, let's see, S&P, 1250? What's a tick worth in a bond market? More than 750. What's a tick in gold? You get my point? 26 days a month of these videos. See if you like it. If you don't like it, you quit. But we're going to give you an awful lot of information. How do you find out? Go to our website under the word research. It's all there. I'm Ira Epstein.